Guys, good morning. May 17, 2019, Friday, 13 market moves daily. There's some key observations from yesterday. Clearly, we've reached the top trading range of our trading tunnel. And as soon as we did that, institutional profit taking begins almost immediately. As soon as we hit these levels, 28.80, 29.90, we see institutional sellers come in out of the woods right away, and they're starting to take profits. Clearly, pre-market so far, that behavior is continuing. So we were correct to observe this move 6 going into the end of the close, predicting oftentimes that there's just a little bit more of downside. Now, remember this, guys. It is easy to be a bear when everything is falling. It's also easy to be a bull when everything is going higher. So be careful and try to psychologically identify that, because right now, if you're staring at your screens, I'm not sure if market's going to rebound slightly by the time we're going to go into the open, but everything is pointing to everything selling off. Now, one of the things that we always talk about is the volume. Well, the volume is actually low on the sell side pre-market, which is bullish. So you may be looking at your screen and everything is red, and you may be inclined to be a big bear today. However, what we've seen is lately the institutional behavior has been back in style as first buying the dip. So pre-market dips are expected to be bought when stocks drop on low volume. Now, it does not mean, however, that before these buying the dip behavior is going to resume today, that we're not going to hit some critical levels, and we're going to review that in just a second. Now, I know, especially on a day like everything is in the red, you certainly wouldn't expect me to be talking about Amazon hitting 2,200 by July 19th, literally in the next 64 days. But I'm not saying it is going to happen. I'm just considering that aspect because with the Brexit today and all the negative headlines hitting, John Deere projecting, cuts in their sales going forward from here and so on. So there's some definite negative headlines that's hitting everything, which may actually create a really good buying opportunity. Now, typically, we try to focus on short-term trades, but this is one trade to just simply consider, guys. It's just buying July 19th Amazon calls in the expectation of Amazon actually hitting 2,200 by July 19th. Why would you want to do that? Well, generally speaking, if you study the history of the Amazon charts, and I'm likely to just make a separate video about this, but just briefly speaking, it typically runs up, as you know, in July is when Amazon hosts their big sale day. The Black Friday day for Amazon is in July and typically falls anywhere from like July 7th through the 15th. So that's why July 19th expiration would be a good target area. Again, those expire in 64 days. And I've looked at them. They're not super crazily overpriced. But again, if you study the charts, Amazon typically runs higher between now, May, going into July, into the expectation. And once that Black Friday for Amazon happens, it typically takes a nosedive from there, at least temporarily. So there's a lot of bullish developments on the Amazon chart. However, you may want to wait for a slight pullback. As a matter of fact, among all the FANG stocks, Amazon pre-market is down on the lowest volume, which gives it the higher probability of rebounding higher from here compared to any other stock so far today. So keep an eye, buying the dip in Amazon, especially when you hear headlines, negative headlines associated with Brexit. Brexit has a history of tanking markets temporarily, and the impact of Brexit has been just very neutral lately. So we're not expecting, this dip to continue. So again, it's going to be easy to be a bear when you're going to look at your screen, but just keep in mind that overall behavior of the institutions was buying the dip, so they're likely to buy the dip. That is why the key observation is to watch out for a move higher in the second part of the day, despite all the negative headlines. And in this video, we're going to review Nvidia trade, AVGO, correlation type trade, Baidu, BABA correlation type trade, and we're going to take a closer look at DE. Now, what are the areas that we're targeting in the tunnel? So we're likely to retest mid-range of our trading tunnel. Areas we're targeting is 28.52, 28.40. At some point today, we could revisit these levels. At the time I'm recording this, the markets are trading at around 28.60. So, but at some point today, we're likely to test these levels. And again, 7-8 points under was the area where institutions were buying this market just a day ago, pre-market, all morning. So they're likely to support this level. So once we get to this 28.40 to 28.45 area, okay, expect that we could probably slow down there as far as the downside, and institutions could begin to buy to support the same level that they were supporting a day ago. So keep this trading range in mind, 28.40, 28.52. And ultimately, I think we are going to squeeze a push higher above 28.52, which is going to reconfirm the behavior of institutions coming in and buying the dips despite of all the negative headlines. It's going to be very interesting to observe that day. Clearly, it is not 100% outcome that it is what's going to take place. But if it does, some of the things that I just touched upon as far as Amazon 2200 by July 19th and so on, those are some things that could have a higher probability of actually materializing over the course of the next 60 days. So let's get right into it, guys. Considering Nvidia 170, 165 puts on any bounce. And I drew this for you. You guys know what this looks. If you don't know what this looks like by now, guys, you seriously need to go and review the charts and divergences course, okay? So what the heck is this? Well, there's two ways to look at it, okay? Number one, it's a classic head and shoulder. And when we're looking at these head and shoulder formations, right, they can happen on any time durations. 1 day, 1 minute chart, 5 day, 15-minute chart, you know, daily chart, 2-year chart, 10-year chart. And so the idea is the same, right? Your shoulder, your head, the other shoulder. We know what happens next. Remember, recently I was giving you this head and shoulder on similar chart, but for the VIX. When VIX was around 18, 19, we saw this pattern on the VIX and we said, hey, the next move is lower. So there's probably going to be some bulls in Nvidia. However, you know, coming out maybe at the market open. So ideally what we want to see if it's going to get back to the shoulder area of 164. That would be an awesome entry. So again, we don't want to buy puts at the lows because especially Friday puts, you're going to be able to pay a lot of premium for those right at the market open. So generally, you're much better off waiting for a bounce. I'm not saying we're going to get right 164. We could just get to 164, 162 and resume the drop. Remember that last time Nvidia reported earnings, it had a very strong support level at about 155. So we're not really targeting a humongous drop here. Ultimately, I think Nvidia will fall back to the 140s, but not necessarily today. So your trade basically is wait for a bounce, 162, 164, buy 165 puts in the money, especially if you're trading puts that expire today. Just buy them in the money, 170, 165. The probability is going to stage a reversal after this head and shoulder is unlikely, especially reviewing the longer time chart frames as well. I'm about to show you those. And the second way to look at this from perspective on the market moves, guys, it's a move 11, right? Anytime you see this, it's a move 11 variation. And let's take a closer look to see how firm this case actually is. What do you see on Nvidia daily chart? Do you see this move 11 that's formed over a much longer duration, March, April, May? See, this move 11 was forming. And so now we have a confirmation on the daily chart that move 11 is there. And if you really zoom in and you study and apply everything in charts divergence course, you'll see the multi-top formation. You'll see the decreasing RSI, which is divergence as it was hitting the tops right here at the 190s. And that coincided with us. Remember in April, we made multiple videos saying, look, we're bearish on the semiconductor sector. The drop is coming, while everybody in the news was talking about what? Oh, semis, they're alive again. You know, they're going to go set all-time highs and all that good stuff. So it really represents a good, we can project this chart onto some other semiconductor stocks, and I'll give you an example in just a sec, and that are still trading to all-time highs. Therefore, we can target much significant moves to the downside opposed to a move in Nvidia that pretty much materialized to a great extent already. And based on this chart, clearly, for today, right, we want to maybe target again this level of 155. Once it gets to 155, just, take it out because, there is a chance it could fall to 150. But starting taking some gains, if you're getting 164, 162 by the time it hits 155, it's probably a good idea, especially if you're trading daily options that expired today. Now on weekly chart, look how cool this is, right? We get another head and shoulder on weekly chart. Now this tracks the stock for the last couple of years. So here's your shoulder, here's your head, here's the other shoulder, and you see how we just keep, no matter which chart we look at here. And the goal with charts is to just look at different multiple time frames to get confirmation across the board. So we're getting the same top information all over the place. And clearly, why do we think the move is still there to the downside? Well, because that's what you typically get after head and shoulders. That's what you typically get after move 11, especially when it's confirmed by this MACD. Look, you remember, every time you get this hook on the black line that's about to cross the orange line, that's a bear right here. At the same time, we're seeing that even at these lower levels, there's not really a whole lot of people buying, so they're likely to unwind some positions over the course of the next 7 to 20 days here. We could see it maybe revisit this level of 140. Again, a correlation type trade you want to consider, guys, is a VGO, because the stock is, at these levels. I send out a message to the group yesterday saying, look, I'm buying some of these because we're expecting the pop and drop in Nvidia. So far, VGO is down, not substantially. It's down to maybe 290. That basically falls like $5 on low volume. So the curiosity on this trade is trying to figure out, is the volume really going to accelerate once the stock is going to be open? Banks were getting out of this trade on super significant volume yesterday, and so we saw this big drop yesterday of like $6 roughly, and I think this is going to resume and continue. In the next 60 days, we could see a VGO trade down to 250. Now, there is a consideration that could actually drop to, let's say, 280, 285, and then bounce back and revisit the levels of this 310, 320 before actually having a substantial move lower. But getting a consistent reading on the MACD. Look, this thing is just about to cross over, and accumulation is still, and there's plenty of sellers that could come in because many people have been buying the stock, and they may use this Nvidia signal as an opportunity to get out at still what appears to be pretty high levels, close to all-time highs on AVGO. So if you haven't got into the trade yesterday, you can certainly still get into the trade, but again, make sure that you're getting into this trade on a bounce. Considering Baidu 145 puts on any bounce, the issue with this trade here, guys, is clearly the stock is down quite a bit. So how much more downside do we have? And the strategy is the same. When you're buying puts, you want to wait for a bounce before you get in to actually generate some profits. So right now, pre-market, as I'm recording this, we're at about 135, 136 level. So you want to come in and basically wait maybe to an area of 142 to actually get in on the put side. Or better yet, actually short an alternative, which would be any other Chinese stock, and clearly an easy one would be like BABA. So we'll take a closer look at that. What do we see in the Baidu chart? Same thing, guys. The head and shoulder is just the predominant pattern in a lot of these stocks. And more importantly, I've got these orange dots here that represent gap downs. So we've had a gap down in this level here. We had another gap down here and another one. And going into the earnings report, we actually had a bearish reversal candle. So clearly, if you look up this chart today, there's going to be another gap down, so we could continue drawing this orange candles. Now, at some point, the history of these gap downs is going to stall out. And at these levels, 130s, I mean, it's just very hard to imagine this thing going to 100 level or 120. I mean, it's a good company. It's gotten hit really hard because, again, it's projecting some really slower sales going into the future from here. But the company is still a solid company. So it's reasonable to expect that some people are going to come in and possibly buy the dip. I don't think they're certainly going to be able to close this gap. So maybe target this area of 142 as a bounce, then buy 145 puts when it's trading at 142, close the trade when it's back trading down to 135, 136 area. Here's your trade. BABA, you can put an easy correlation type trade. Also notice in multi-top formation, look, move 11 is forming. One concern with BABA after the earnings were good. It did project slower growth going into the future. It didn't seem to bother the institutional investors because we saw some huge volume on the call side of the trade. So all the alerts that we've been sending out throughout the week saying, hey, let's buy some calls, BABA calls. I mean, they were working for a while. But now that we're seeing the reaction to the Baidu, that's actually a reason to get in on the opposite side. Timing is key, guys, right? So initially we said buy BABA calls on Monday when the stock was trading at 169, 170. So for those of you that stayed the course through Thursday, I mean, it did trade all the way to 180 or just above 180. So there were some profits realized there. Now, I know some of you guys were jumping out at 175, 176. Some of you did not pull the trigger Monday. You were getting into the trade later. So, you know, timing is key, and it really is going to play an important role. How long you're staying with the trade? Do you have the patience to stay with it? What your entries, what your exits are? So speaking of the entries and exits, it is not dropping on huge volume, but clearly it does have potential to fall to an area of maybe 170, 165. Last time I checked pre-market, it was at an area of about 172, 173. So you don't have a huge probability of a huge drop, but if these move 11 is going to continue developing on BABA, I mean, 160 is in the cards because this acceleration volume, again, we're getting a consistent MACD reading across the board here, and plenty of people could come in that have a change of mind considering some of the things that we're noticing in the headlines today. We could get a reasonable move lower, but be careful. Again, do not short anything at the lows of the day. Wait for a bounce to get in on the short side. And your first target area on BABA would be this 169, because remember, that's where Monday we had some institutions come in and they started scooping up the stock about 169 level. So if you're getting into the trade, let's say at 174 today, target your exit at 169. And if you're buying next week or two, then possibly target an exit at 165, 160 area. Considering DE 145 puts on a bounce. This one is a tricky one. It's always does this, right? Every time DE reports earnings, it drops, but then it bounces. So this shouldn't be very hard to catch a bounce on this one. Right now it trades at 138, 139 area. It should be an easy bounce for it to go back up to 141, 142. So maybe buy a few puts there, in the expectation that it could still actually bounce to a level of 143, 144, and that's when you go ahead and finish your steer step and add a few more contracts. So start buying some puts at 142, 143, add some more at 144, and it may not get to 144. It might just stop at 143, but this is the area where you want to start building some puts in the expectation of a further drop. So far pre-market DE, despite of these poor projections for the next quarter, the stock is not down on a huge volume, which makes us believe that a bounce is going to be very likely, and especially in the history of the stock, it likes to stage the bounces once the market opens up, followed by further drops. So just remember that we're not expecting any crazy moves here, but maybe to a level of 135. 135 is, if you look at the history of the chart, right, it got to the 135 twice and it bounced out of it. So basically stay in the puts, come in on the put side, 142, 144, stay on the put side till it hits 135, 136. At that point, it may be wise to reverse the position. Same thing, right? There's your head and shoulder pattern. Here's your gap down 1, gap down 2, and this morning pre-market we're going to have a gap down number 3. So be careful. There's not really a ton of room on this trade, so your profits will really be contingent upon how good your execution is and the levels at which you're coming in and getting out. So this weekly chart makes things quite a bit more clear. You have a ton of divergences on this weekly chart, right? So it was hitting this 170s level a year ago on this huge spike in the RSI, and the second time it got there recently, the RSI was definitely lower. Here's your divergence on catching top here, followed by one bearish gap down, second bearish gap down. Again, we're going to have a third one. Target this area right here, 135, 136 for your exit. Same consistent reading on the MACD right here, guys. Okay, market move yesterday was a move 1 with a clear behavior of a move 6. This is how move 1 looks. We opened higher, we moved higher, and towards the end of the day, we had characteristics of a move 6. Two-day sequence is 8-1. Remember, yesterday when I was describing the move 8, I said it will be hidden between 2 bullish moves. So we had a move 7 on one side of the move 8, and yesterday we had a move 1, which is a bullish move, and so 8 is typically in the middle of the bullish moves. Move 6-11 again was observed, right? And the way this behavior looks, again, it looks like a pyramid, but what makes it a 6 behavior is acceleration in the volume to the downside when people are getting out and collecting profits. 5-day sequence 4-3-7-8-1. Again, the bulls are dominating, so don't let this market action pre-market of being down trick you. Again, we're considering these levels right here, 28.50, 28.60, and possible reversal from there. Definitely 28.40 is in the cards. I forgot to put the dot right here. And if we were to draw this uptrend line, right, the series of high and lows, it's reasonable to see that we could easily stop at this 28.40 level and resume the move back to the higher trading range of the tunnel. VIX review is VIX numerically is still high. It's an important day for the VIX today. The question is, will it close above 16 or will it close below 16? This is very crucial for our strategy. Next market move, clearly we can go into a 3 today, where we're already gapping down pre-market and we could keep going lower after trying to bounce a couple of times. We could create the pyramid where we're gapping down, moving higher, and finishing lower again as in a variation of a move 11. And not to discount the danger zone to the bears that in the second half of the day, be ready because we can get that bounce. And we're doing a move 4 in the latter part of the day. Key takeaways. Market will likely retest the mid-trading range of the tunnel today, 28.52, possibly 28.45, and bounce towards the end. Will VIX hold above 16? Watch for possible move 4 behavior between 2 and 4 p.m. Do not short at the bottom. Short bounces only. Will the market hold 28.52 by the end of the day? And again, we could be stuck in this range, 28.26 to 28.90 for a number of days. Guys, make it an awesome Friday. Have a great weekend, and I'll catch you in the next video Monday.